영상이 시작되기 전에 먼저 등장할 5개의 문장을 보여드릴게요. 빈칸에 들어갈 표현을 유추해보세요. 단어 하나하나를 직역하지 않고 전체 의미에 맞게 의역하고자 노력합니다. 그게 바로 영어식 사고의 출발이에요. 그럼 시작해볼까요?
It fundamentally changed who falls into that category. We would see further reductions. That seems counterintuitive if you want to encourage participation. For anyone trading more actively, it definitely puts a damper on things. The benefit is practically inaccessible.
Welcome to the Deep Dive. Today, we're really getting into Korea's 2025 tax reform.
That's right.
Our mission really is to cut through some of the noise. We want to unpack the pretty big gap between what everyone was expecting and what actually landed, and figure out what these changes truly mean for your financial planning. Especially if you're, say, a professional or an individual investor, maybe in your 30s, 40s, 50s.
Yeah, that group's definitely feeling it.
Think of this as your shortcut, your way to quickly grasp the strategic shifts you might need to consider.
Let's do it.
So let's set the scene a bit. The government made this announcement, was it August 1st, 2025?
That's the date.
And it seemed to leave quite a few people, especially those mid-career folks and investors, feeling, well, pretty disheartened.
Definitely. There was a real sense of disconnect. What people thought was coming versus what was actually rolled out.
Okay, so talk us through the first big piece.
Yeah.
The capital gains tax threshold for major shareholders. What was the story there?
Right. So the expectation, almost universally, was that the existing 5 billion Korean won threshold would, more or less stay put, maybe a slight tweak.
Defining major shareholder pretty high up.
Exactly. The thinking was, this targets the ultra-wealthy, people with real clout in a company. But the reality, quite different.
What happened?
It was slashed, dramatically lowered to just 1 billion KRW per stock.
Wow, 1 billion. That's a huge change.
It's massive. It wasn't just a minor adjustment. It fundamentally changed who falls into that category.
So it pulled in a whole new group of people.
Instantly. You're talking mid-level investors, maybe people managing retirement funds, folks holding employee stock options from their company. Suddenly they're facing capital gains tax.
So it felt less about targeting speculation and more like penalizing saving.
That's certainly how many perceived it, like a penalty on, diligent wealth building rather than just going after big-time traders. It caught a lot of people off guard.
Okay, so that was shock number one. What else shook things up? You mentioned the securities transaction tax, the STT.
Yeah, the STT. Another area where expectations and reality just didn't line up.
What were people hoping for there? Lower taxes, right, to boost trading.
Exactly. The general feeling was we'd see further reductions, sort of aligning with global trends, making it cheaper and easier to trade, encouraging market activity.
Right.
But the reality was a complete reversal. They actually rolled it back to the 2023 levels.
Wait, back up?
Yep. 0.05% for the Kospi market and 0.20% for Kosdaq, higher transaction costs.
Huh. That seems counterintuitive if you want to encourage participation. What's the impact for, say, younger investors using apps?
Well, it's perplexing, honestly. It directly raises trading friction costs. Think about someone, maybe a younger professional, carefully putting money into ETFs each month via an app. Every single one of those trades now costs more. For anyone trading more actively, it definitely puts a damper on things. It hits your bottom line every time you buy or sell.
Feels like it discourages adjusting your portfolio quickly.
It could, yeah. The message seems to be prioritizing maybe revenue or stability over making the market more liquid and accessible.
Okay, so capital gains rules got tighter, trading got more expensive. People must have been looking for some good news on dividends, right? What happened with dividend income tax reform?
Ah, yes. Dividends. The hope there was for something broad, something really investor-friendly to reward holding stocks long-term. actual relief.
Makes sense. Encourage stability.
But the reality was much more limited. They introduced this separate taxation structure.
Meaning it's taxed differently from your regular income, sometimes better.
Potentially, yes. It only applied to high-yield stocks that meet really strict criteria, things like payout ratios and return on equity, ROE, very specific metrics.
And how many companies actually meet those strict criteria?
That's the problem. Not many. The vast majority of listed companies just don't hit those targets.
So for the average person investing for, say, retirement,
The benefit is practically inaccessible. It didn't really do much to incentivize that kind of consistent long-term dividend investing that many people, especially in their 30s to 50s, are looking towards.
right, so bringing it all together, what's a big picture impact for our listener navigating their finances right now?
Well, it's pretty clear this gap between what was hoped for and what was delivered has caused a lot of disappointment. You saw it reflected in stock market volatility, too.
And for professionals trying to balance everything, job, investments, saving for the future.
For you, this really demands a pause and a rethink. You've got to look at your asset allocation, maybe reconsider your timing on selling assets, and definitely adjust your strategy around dividends.
It sounds like reforms that were maybe pitched as fair or pro-growth ended up feeling quite different.
Exactly. The perception for many was that they were actually regressive, restrictive, and this is all happening when people are already dealing with inflation, global uncertainty. It just adds another layer of pressure.
So connecting this back directly to the listener's path forward.
It means taking a hard look at your financial plans. What you thought was a safe or smart strategy might need adjusting now, given these new tax realities.
It really raises a broader question too, doesn't it?
Yeah.
Beyond just these specific tax percentages, what does this whole situation tell us about the relationship, maybe the friction, between government policy and your own individual financial strategy? Especially in a world that's changing so fast. Definitely something for you to consider.
영어와 시사 경제 두 마리 토끼를 한 번에 잡는 알찬 시간 되셨다면 구독과 좋아요를 꾹 눌러주세요. 감사합니다.